Welcome everybody to the Digital at INSEAD series in the case. Today we're going to talk about the Cru World Wine trading and investment platform case, which will be a conversation involving Jeremy Howard, CEO and founder of the company, and myself as one of the case writers. It's a great pleasure to have you here. Thanks also to Accenture, who's sponsoring the case. Some of you may have come back to this series. I think we are nearly 20, had it for nearly 20 times now. So it's getting to be a quite useful source of knowledge about the cases that we have. So keep in mind that this is a real case. It's a real discussion of how Cru World Wine was created and the changes it has gone through. So this case isn't really written to make one particular point. It's more like you can draw a variety of insights from the case, which is the way we often like to do things. Now, there are some particular points that are important, and I'm going to emphasize two of them when I talk about the case here initially. But first, let's go through this history briefly. So it really started as an investment. So Jeremy Howard had invested in the wine retail business SL, which had an unexpected and rapid growth in Hong Kong, but also a bit complicated business structure, which led it to run out of money and come back and ask for more. At that point, he thought that things could be done differently. We'll talk about how later, but he ended up offering to buy out the owners and aim for more of an international fine wine business. He then met Simon Farr, who was working for as part of a B2B business, handling the UK wine segment. They ended up actually spinning out that wine segment and merging with the then SLL and then creating Cru World Wine International. Now, a few steps followed after that. These are not in chronological order, but each one of them is quite important. Now, gradually changing to platform model and an inventory-less one, even. Providing storage solution, transport and delivery solutions to the clients, but also broker sales, not only from winery or the agent of the winery to clients, but also among clients. Also, there was a B2B operation selling to restaurants and the like, which was closed down. And the sourcing of wine to actually do trades on was changed, actually expanded, including a way of letting clients access the exchange LIVEX, London International Vintners Exchange, which is something that regular people can't really access directly. It has to go through someone like Cru, which is a professional client. What happened afterwards was growth. In fact, they've had organic word-of-mouth growth and also geographic expansion is now 5 times the original size. So a quite successful growth period. Now, what are some of the insights that we can gain from this? Well, first, and maybe the simplest one is platforms look alike. Superficially, they resemble each other quite a bit. But in order to understand platform, it's central to be see what's actually behind that interface, because the economic model that's behind the interface is very often important and very different among platforms. Now, what platforms do is that they can be a storefront. It's the classical bricks to clicks model, where there's a retailer segment that gets eliminated, and then the platform takes over and has a logistics solution instead of it. Now, economically, part of the business idea there is that it allows for some scaling, which can lead to market dominance, but often platforms competing with other platforms find that cost savings and those things are easy to replicate. And so they'll end up having one big logistical and warehouse operation compete against another one. Both of them may be using long-term strategies to try to beat the other one, and it can be complicated. The other thing that platforms can do is that they can centralize information access. They can be convenient places to find a certain kind of good. Perfect for people like me who really dislike walking around in stores to find things. Everything in one place, which is a screen that I also use for work, is perfect. But that particular search function isn't necessarily so chargeable in any way. There has to be also a way of being the broker for trades. And taking that one step further is that the platform can be an exchange platform where various agents can meet each other, customers, clients, and so on. So just as an example, we often use both in the press and also in teaching the classic example of Amazon. And their giant warehouses are famous. We know them from the press because right now there are unionization efforts there. We also know them from teaching because we often show those fabulous robots that are transporting goods around different places. And that's one version of Amazon, but there's also another one. How often isn't it that you order something from Amazon and it has never been in a warehouse? It's shipped directly from a maker or from some other warehousing operation, which means that Amazon is simply a broker. It doesn't carry inventory, it doesn't do warehousing, it doesn't do logistics for those particular goods. That is the lean model, the platform model. And the inventory heavy model one and the lean platform in Amazon are behind the same screen. So what Cru is doing is a quite pure broker and facilitator role. Now, it can be complicated to buy wine and to store wine and to have wine delivered. All of those are facilitated on Cru. So owner storage is taken care of, owner shipping from place to place, owner delivery to the home is taken care of. So that platform is comfortable. Of course, this is charged for, but not at a high rate. And then once you have all of these clients who prefer to handle their wine through Cru, you can also broker sales from the winery or the agent of the winery. It's also possible to broker sales among clients, and you can take a commission. Cru can take a commission, a cut of those sales revenues. Now, this is better than the storefront model because there isn't any inventory. The logistics are much simpler. It also beats the information centralization model because, again, it's not just collecting information, it's also using that information for brokerage purposes. So that's one key point and a quite important one. Platforms are different from platforms, right? And Cru is one particular kind that's quite interesting commercially. The other thing that I find to be wonderful about the Cru case is that it's a great example of pivoting. Now, we know that pivot is almost like a meme-like word. Everybody talks about pivoting, especially among startups, especially in Silicon Valley. But do we always understand what it means? Well, the word is being used in different meanings. As someone who enjoys the sport of boxing might know, pivot has a very specific meaning. Here's the front foot. You keep the front foot in place. Here's the back foot. The back foot swivels and the front foot stays in place. That's a pivot in boxing. What's a pivot like in business? Well, one thing that it isn't is that both feet move. Pivot doesn't mean that you change everything. That's not a pivot, that's hopping around. Different. The other thing in boxing is you need to be very careful to know which is your front foot and which is your back foot. Easy in boxing. In business, it's a little more complicated because the front foot is where your future value lies. So keep that one constant. The back foot is what is dragging that value down. Get rid of whatever drags the value down, shift to something more valuable, pivot away from your losses. That's the whole point of pivot. And it's often a bit deceptive because where the money has gone is often what people think is the front foot of a business. Often it's not the front foot, that's the back foot. That's what's dragging the value down. And Cru's pivot is a wonderful example. Where had the money gone? Into investor inventory, into keeping the wine stock from the original SL venture. But where was the future value? Relationships. Sellers of wine, buyers of wine, connect them, and then business will happen. And you can take a commission on that. And they can be connected without holding stock. So what's dragging the value down is the inventory. That's what should be pivoted away from, right? It's a drag on the value. Pivot into improved services to attract more buyers, to attract more sellers. And once that combination of buyers and sellers starts to grow naturally, then this becomes a sizable business. And one of the neat things about it is that scaling it has a very modest cost, but wonderful benefits. So this is just a short idea of some of the points in Cru. There's also, you can have a lengthy discussion about where should Cru go on from now? What are the expansion paths, and should Cru expand much? If so, how fast? But let's not get into that because I think this is a perfect time for me to invite Jeremy. Jeremy, pleased that you're here. Please say hello to all our participants.
Hello, thank you so much for the invitation, Henrich. That was a wonderful, very short but poignant presentation, and I'm looking forward to unpacking some of those points with you, and I hope with lots of interested listeners.
Wonderful. So, the big curiosity, I think that in my mind, and I think also in the minds of everybody around here is, I mean, you decided to take over a venture that was in trouble. So you must have seen some potential and something different than what the venture was like. What was your thinking at the time?
Yes. Well, I would say that most startups do end up coming back for more capital. Anybody who's been involved in angel investing will know that when the business goes well, they come back and ask for capital for growth. And when the business goes badly, they come back and ask for capital to plug previous losses. So that wasn't a big surprise, but I did see some potential. I was actually a frustrated user in some ways. I'd been collecting fine wine myself for a few years. And I got quite frustrated with the services that were available at the time. It was very difficult to access the market. It was very difficult to figure out what you owned, where it was, and how much it was worth. So I had at the back of my mind that I wanted to create something better, some kind of bigger platform for people like myself. And I definitely had a vague idea that the future would be more digital. So I was very interested in sort of digital e-commerce. And I had a background myself in trading and in investment banking. And so I was quite interested in the idea of bringing buyers and sellers together via some kind of exchange-like platform. So I think I didn't try to overthink it at the beginning, and I think that's something I'd stress to all your students is, you don't necessarily have to overthink things. And I think your point about pivoting is exactly right. I think you need to have a few key sort of drivers, if you like, for your roadmap. But trying to overthink too much detail at the beginning is not a good idea. So anyway, as a couple of long story short, I ended up investing some more money in this startup, but then requiring that the original management stepped aside and I took over. And straight away, I did start the process of experimentation and iteration. This is what led to two key pivots. The first one is the move to the inventory light model, which we're going to explore in a little bit more detail. But the second one was on the product mix. And that really came about through some good old-fashioned, business school-like analysis. So I looked at the unit cost and the unit profitability per SKU, and I realised that even though the gross margins of the business looked quite healthy, because they were selling products at a very low price point, the actual dollar profit per unit was quite low. And by the time they'd factored in, or we'd factored in, the costs of shipping and transfer and movement and insurance and breakage and returns and all the other things which go on, I realized that actually the business had probably sort of negative operating leverage. So the more we sold, the more money we were going to lose. So the first pivot was quite an easy one, really, which is, as you said, not to throw everything away, but to start adding some higher value products into the product mix, and then see how that affected the business and the P&L. And that was quite an eye-opener, because we found quite quickly that we were able to sell products at a higher price point. And even though the gross margin went down, we ended up with a much higher cash profit per unit. And that enabled us to turn into profitability and start to generate some cash flow and some investment funds. And I think that was probably the most important early pivot.
So it's interesting because the way you're talking about it reminds me a lot about two different ways of improving things in entrepreneurship. One is that you're looking at the set of goods or business, and you're thinking, this doesn't really fit me, but a different business would be perfect for me. And maybe I'm not the only one of my kind. That's the more intuitive, Steve Jobs like approach, you could say. Now, the other one is the more analytical one. Just you find out, how do you move in a niche space? How do you work out the prices and cost structure as well as possible? Did you combine them? It almost sounds like it.
Yes, I think to some extent. I mean, I've always been a great believer in iterations and experimentation, and that's why I opened by saying I didn't come into the project with a lot of very detailed preconceived ideas, because very often they're just wrong, and they don't survive market testing. So for me, it was a continual process of trying different product mixes. I mean, I was trying to find a niche which was going to be A, profitable, and B, scalable globally. And I very quickly worked out that retail wine was not going to be that product. And so as soon as we started to offer much higher value wines, we really transformed the business. And we also found that the clientele was much different as well. And that was very, very important, because the clients who buy more expensive wine, and we offer spirits as well, they have a different buying pattern. They tend to buy more regularly. They're obviously spending more money, but they're also buying in a more sort of structured way. So they buy new releases of the same wine each year. So they actually end up being much more sticky and much more predictable, and obviously in business terms, much more attractive clients. So that was a key insight that we got as well. And then the other thing, as you mentioned also, was so when we took over the original retail business, so they were even though it was an online business, it was sort of a myopic traditional online business, in the sense that they had a whole bunch of inventory in a warehouse in London. They were purely focused on retail, as I said, because they thought retail wines were easy to sell. It's actually probably the other way around. And then also they were very focused on the UK, because there was a couple of founders. They were perfectly, they were good people, but they found it difficult to look outside their home market. And the other sort of major change that I made on taking over was to at least experiment with it, offering wine outside the home market. And there we were very fortunate, because that was a time when there was actually a big sort of speculative wave of buying coming out of China of very fine wine. This was before Premier Xi came in with his crackdown. So in those days, I'm not going to say too much, but in those days, let's just say gifting of expensive wine was very prominent and prevalent in China. And it was all being funneled through Hong Kong. So we very quickly found that there was significant demand from buyers in Hong Kong. So we sort of cobbled together a pretty sort of amateurish website to market our wares in Hong Kong. We sort of made some logistics work. But because the demand was so strong, the clients were very forgiving about having to wait for wines to arrive, on ships and things. And we very quickly, I mean, literally within a couple of months, the Hong Kong sales were above the UK sales, even though the UK business had been going for a couple of years. And again, that was the result of an iteration and experiment, if you like, but obviously being data driven, but perhaps a little bit going with a hunch. So I think you're right. I think it's all these different things sort of come together. So definitely some analysis. But I think the really key thing is listening to the market, and sometimes you do need to put your own ego on the back burner. And I still wrestle with it. I think all entrepreneurs tend to be quite strong-minded and opinionated, because you have to be, because you have to have that resilience. And it can be very difficult to look at a set of data and say, that's not working, or that I didn't think that was going to work, but it is working. So I think listening to the market is critical as well. And I think we've been very good about that as we've expanded around the world. We did have a project to launch in China, and we did work on that for a while. It was just proved to be too difficult. And in the end, we have to, it doesn't mean to say we won't come back to it, but we had to put it on hold for a while. And it's difficult because you invest emotionally in it, it becomes something which you really believe in and you really want to make work, and you read all these books and watch all these YouTube videos, people like yourself probably saying, oh, resilience is so important. But it is also important sometimes to know when the data is telling you something and you have to take a step backwards. So those are some of the important sort of early lessons, I think. Constant experimentation and iterations, listening to the market, and crucially finding that niche where you can actually get some traction in the market, and that really is crucial. And as I said, it took a fairly big pivot from retail to fine wine to enable us to achieve that.
So you actually answered the question that I was about to ask, which is, the move up to fine wine obviously was a fantastic one, and jumping over to Hong Kong also wonderful, helped you find the niche. But then there are the moves that don't go so well, and then do you reinvest or do you pull back? Well, China was an example then of
It was just regulatorily, that's a word, just too difficult. It was just too difficult to get product into the country. We had some disadvantages. Some of the competition in Hong Kong, they have sort of special ways of getting wine across the border, which obviously we're not going to be involved in anything like that. So so we were sort of fighting with one hand behind our back, perhaps. But it is difficult. I mean, maybe we'll come on to talk about regulation, or maybe we can talk about it now. But I'm talking to you here from Dubai, and we're working now on a project to increase our client base in the United Arab Emirates. But again, the regulation and the logistics are quite challenging in this market. There's lots of people who are happy to spend money on fine wine and spirits, but actually getting it in here is quite a challenge. And we found the same in the US. We have a legal entity in California, and that's great fine wine market, but again, the regulations there go back to the Prohibition era, it's very difficult to move wine between states, and you have to, without getting too much into the weeds, you have to have different licenses to do different things, and these are some of the real challenges that we face as a business, and sometimes you do just have to admit that it's just not right at the moment, and you're better off targeting a different market and cutting your losses.
Yeah, so some of it that has to do with the niche choice, right? To find out which is the friendly niche, but some of it also seems to be the cost structure. And I emphasized a little bit earlier that in terms of managing just the platform structure, you took a big step forward. Actually, a lot of what we teach now, you did like 8 years ago. Can you elaborate on how you found it?
Well, again, probably, let's say iteration. It's a better word than trial and error. I think what we're coming on to now is the capital light model, which is really almost the same thing as a platform model. I'm sure your students will be very familiar with the fact that Uber doesn't have a giant fleet of cars and doesn't own, a giant fleet of cars. Crucial distinction. Airbnb does not own a suite of hotels. And as you said in your slides, Amazon increasingly works via its marketplace, where it's connecting its buyers and sellers together. So we did want to do the same thing, and I think that was an early decision that we took, and I think we did it sort of for 3 reasons, really. The first was simply economics. So any kind of trading company, if you look at their balance sheet, you will see that inventory ends up being one of the largest balance sheet items. You know, the working capital requirement of a traditional retailer is very, very substantial. So there's a huge drag there on your balance sheet and your return on capital invested. But there's also a lot of risk. And I think people maybe underemphasize the amount of risk that a very large inventory balance will give you. And I think if you're the buyer at you know, a fast fashion clothing retailer, you'd be very aware of the fact that actually, you know, a couple of wrong buying decisions and you can be writing off, you know, 50% of your inventory. And, you know, that's a huge business risk. It's a big source of P&L volatility, etc. So we wanted to avoid that. So we wanted to increase our ROI as well. But then there were a couple more subtle points which sort of came out, I think, a bit more later that we didn't quite realize. And that's using product as marketing. And I think I can't claim that I foresaw this, but it has definitely been a very positive impact on our company that because we've employed this capital light model and we've linked together all these various sources of inventory, perhaps we'll talk about that next, we've been able to build a very large product range, so nearly 20,000 SKUs. And what that means is we can then list those SKUs on price aggregating sites, which are used by buyers all around the world. And because we constantly appear on these price aggregators, it's actually a way of driving customer acquisition because people just constantly see us. And it's actually a better marketing engine than, you know, Facebook ads or, you know, whatever else it might be. So we've now worked out, sort of in hindsight, that actually our large product range has actually been an amazing marketing tool for us. And then the final point, and this was something which we did foresee, is that we wanted to be able to give dispassionate advice because we do have, even though we run a platform, we have a team of human account managers, advisors as well. And we also wanted to get away from the traditional model in wine where the retailer has an exclusive arrangement with a producer. It's called an agency relationship. And they are basically tied to that producer. And what that means is that, you know, a retailer will have, I don't know, you know, half a dozen or a dozen champagnes, which it is the agent for. And so if you as a client, Henrich, or anybody listening to this, you know, interacts with this company and says, can you recommend a great champagne? Guess what? You're going to get one of these 6 champagnes recommended to you. And we didn't want to be in that position. We wanted to give completely dispassionate advice where clients asked for it and be able to basically sell without conflicts of interest. And that again meant that we had to sort of reinvent the business and sort of do it in a different way. And that again led us to the networked business, the platform business, the capital light business. These are all, in my opinion, these are all sort of facets of the same structure of company. Yeah, so those were the main drivers, I think.
I mean, it is quite remarkable given the nature of the market, and maybe specialized for wine market, that have these clients who first buy and then store, which you charge a little bit, but fine. And then the clients will also put it up for sale, and that's being added to your inventory. So that's one of those many SKUs you have, which in turn shows up in the sales.
That's right.
It's quite a construction. And if I may ask, I mean, the connection to Livex also, I mean, that's a professional site, right? But the idea of connecting your sales to that, it's still unique. Is that right? You're still unique.
Well, I think now there are a couple of other companies who have connected to it. So just for the audience, I think they actually say Livex, even though it doesn't have an E. So the Livex exchange is a B2B exchange. So it's only about 600 companies that are members. If you think about the NASDAQ exchange or the New York Stock Exchange or wherever you are in the world, your local exchange, it's basically like that. So you as a private client, you can't be a member, but they do transact quite a lot of business, and we sort of realized that if we could somehow plug into that, that would give us a great source of inventory. So really, that was one of the very first decisions that we took, was to try to build an API interface with that platform, and that was also sort of a platform company, but in the B2B space. And that was very hard, and it still is hard. And I would say that, you know, the platform model is a great model, but it does rely on certain things, and it relies on good technology. And to some extent, you are only as good as the the inputs, if you like, of inventory that you get. So yes. Anyway, so we had to work out how to plumb this API into our platform, but that did give us a huge source of additional inventory and real-time execution. So if you buy something on Cru and it's actually an offer which is coming from an exchange, then it's immediately routed through to that exchange, and the order is executed on our platform and their platform simultaneously. So it's exactly the same model that say Robinhood as a stock trading platform in the US would do. If you buy some Apple shares on Robinhood, they will immediately execute a trade on the Nasdaq exchange to secure the inventory. So it's quite a smart way of working, but it was very challenging because the wine world is not the same as US equity trading, and the platforms and systems that people have are quite antiquated still. So it was quite a challenge to sort of plumb these things together, and we have a great in-house tech team who have responsibility for maintaining these APIs. But that exchange was a big source of inventory for us, and still is. And then, as you quite rightly said, the other big source of inventory is our own clients. So the great thing about fine wine is it improves with time, as everybody knows. So we very much encourage clients, and they want to anyway, to buy whatever they want, and then they keep it in one of our warehouses. So we have warehouses around the world: UK, France, Hong Kong, Singapore, US, soon I hope Dubai. And that inventory is then available for those clients to trade if they want to. And we very much encourage them to do that because we take a small margin every time that happens. And that's ended up being a very, very significant, very substantial quantity of inventory. Now, not every client wants to trade, unfortunately, but we gradually reel them in, and they, once they get going, they sort of tend to think it's quite fun. But that's the other big source of inventory, and that again took a lot of coding, as you can imagine, to build that. But there's no sort of off-the-shelf software you can buy to do that. So that was myself and my team of talented developers plumbing all that together. But the great beauty of it is, once it's in place, it's then automated. So there is no human interaction. And you don't know who you're buying and selling from. So as a user of the platform, you can buy a case of, Chateau Lafite or Petrus or whatever it is. And, the seller might be another Cru client. It might be an exchange. It might be, we do have our own inventory as well. So it might be our own inventory. But it doesn't matter because, you're going to get the same kind of excellent, it's 100% guaranteed execution. So it doesn't matter to you actually who the seller is. You don't know. That's the way the platform works.
Actually, part of related to this, I mean, the capital light model in your case, it seems to be connected to the interface becoming better and better. I mean, you're putting a fair amount of effort and money, I assume, into that. Explain the reasoning behind that.
Well, we believe that technology is the biggest moat you can have, and I think there's just no doubt about that. If you have the best platform, you're able to offer the best user experience. You will build loyalty with your clients. So we absolutely, and the thing is, as I said, there's nothing you can buy. There is really no off-the-shelf software you can use, so you have to build it yourself. So we put a huge amount of effort into our development, but it's mainly because we're trying to create a great experience for our clients, of course, but also we want to offer them such a full service that it's just very cumbersome for them to transact anywhere else. I mean, theoretically, the thing we don't have is exclusivity. So we're not, it's not like Chanel where you can only buy Chanel from Chanel. You can buy Chateau Lafite from lots and lots of places. So why would you buy it from Cru? Well, we probably have a similar price to other people, maybe a bit better, but we're not going to be dramatically cheaper. So why would you buy from Cru? Well, our concept is if we then layer on all these other services, so you move it around the world, if you move from Singapore to Hong Kong. You can take your collection with you, we'll port it over. You can trade it, you can sell some easily for a very low fee. You can see what it's worth. We provide a lot of portfolio functionality, and that's increasingly important because it is a major holding for a lot of people, big financial asset. And so our vision really is to provide all these additional services on top of the simple process of market access. And if we can do that, given that everybody pretty much has the same product at the same price, that's the way we'll build our market share and eventually become the dominant player, which is definitely our goal.
Okay. So connected to this, I mean, you mentioned the different places Cru has moved into. I mean, starting in Hong Kong, also now Singapore, Dubai is where you're now, there's California, and there are people involved everywhere. And so gradually you're also building up the cost structure. I mean, how do you prevent that one from becoming too big, too expensive?
Yes. Well, we are a micro multinational. So we have people in the US, in UK, France, Hong Kong, Singapore, Dubai, Thailand, various other places too. And how do you, but overall, we only have 30 people. So we're a tiny company in terms of staff size, but they're dotted around the world. Now, they have to be dotted around the world because our clients are dotted around the world. We do have we run a hybrid model. So as I said, we do have human account managers. So each client gets a human advisor that they can talk to as well as use the platform. So we have to have that. So the challenge then becomes, how do you stop this becoming a sort of mushrooming cost space? And the answer is you have to be very efficient in the way you work. And for us, that means the ERP is king. So our ERP, Enterprise Resource Planning System, is absolutely central to what we do. So it's a web-based platform which governs every process in the company, and every team member has access to it. And so everybody sees everything, which is point number one. Point number two, even more importantly from a managerial point of view, is that everybody has KPIs. And those KPIs are visible on the ERP, they're visible to everybody, so everybody sees everybody else's KPIs. And we're sort of obsessed with KPIs. And basically, if you can't KPI it, then we almost don't want to do it. But what that means is that you can look at a dashboard of the performance of the company, and then in real time you can see what everybody's doing, how they're doing, who needs to work on what, and the ERP actually polices the company. I mean, I often say to people, I'm not the CEO, that the ERP is the CEO, because the ERP is actually the one who's actually saying, well, that delivery time is too slow, or that person's, gross margin is too low. I mean, it's all there in traffic lights of colors and green, amber, red, etc. So that's absolutely crucial. And again, it's a lot of work to put it in place, and it's all bespoke stuff. But once it's there, again, you can actually run the business with relatively few people who are very motivated and are managed efficiently by code, if you like. And so that's very important. But then we also use Slack extensively. So we try to build a sort of culture which is true to ourselves. So we don't try to be a company that we're not. We are a digital company. We are a forward-thinking company. We're a globally dispersed company. So we don't pretend that we're not, but we celebrate, our culture in our way. So, when it's somebody's birthday, we have, multiple celebrations on Slack, and, lots and lots of joking and, emojis and things. And it's sort of true to our culture because that's who we are and how we work. And so we have built quite a strong culture. We have a very high employee retention rate, and I think it's because we have built this culture which is digital, but also it is human. There is that sort of sense of human camaraderie. But it's a challenge. But that's how we've solved those problems.
I mean, it brings in all these interesting things that we struggle with at business schools, right? Because in terms of how to teach it, because you have to recruit the person who fits that type of working environment, and they need to be able to do teamwork, right? Even though it's hard to make KPIs that are completely team oriented. Maybe you've done it, but I mean, is this a puzzle that you keep having to solve over and over again? How do you get the right people? How do you make them work the right way?
Well, it is constant iteration. As I said right at the beginning, it's constant iteration. You can make team KPIs, and we definitely do. And that does encourage, but they're quite small teams, usually just 2 or 3 people. But no, we have team KPIs, and I should have stressed also. There's obviously a financial component to it too. So a KPI is best if it's clear, it's accountable, and it's financially remunerated. And I didn't elaborate on this. We probably need another hour to go through all of this stuff, but because compensation and motivation is the whole behavioral economics, fascinating field. But what I find works, or what we found to be successful, is very closely aligning performance with compensation. So with pay, I should say. So we have tried to make a large element of variable pay in our structure, and that gives our team a real opportunity to earn a lot more money if they perform well against the KPIs. But some of them do work in teams, and the financial incentives are split in a sort of pie chart. But we're constantly tweaking it, and every year we reappraise all the metrics that go into it. But I think the key thing is got to be clear, and it's got to be perceived to be fair, and it's got to be actually financially meaningful. I think that's key. It can't be a token. People don't want free cinema. In my experience, people don't want free cinema tickets or a place to park their bicycle for free. I mean, people want they want to be properly paid, and you should celebrate that and make that because it's just being honest to your values, and that way people become very loyal, and they feel like they control their destinies. It's very empowering.
Yeah, I mean. Interesting thing is that this is really the portion of your sales that come through the wineries themselves, right? Because that's the part that you're responsible, or your members are responsible for pushing. But then you have the automatic ones that are really outside everything, right? That's client to client. There's no intervention there, and then you have the LiveX exchange, also no human intervention there. Interesting mix, isn't it? I think the audience are interested. Just how much of Cru is now from the wineries in terms of the revenue? I think that's
Well, I mean, everything comes from the wineries originally. It's just a question of whether it's being traded, on the secondary market, i.e. it's already been sold once, or whether it's being sold for the first time. So I think how I would characterize it is primary and secondary market. So the primary market is new releases of new wine. There's a new vintage of Champagne Cristal. People may have heard of that. That's released, and we get directly allocated that from Louis Roederer, and we then make that available to our clients. That's still the majority of our business. Absolutely. Because that's where there's very strong demand, and that's what a lot of our clients are looking for. So that's, I mean, I'm not able to give the exact numbers, but that would be more than 50% of the business. But the secondary market trading, the interclient trading, the exchange-based trading, that is definitely growing. Every year it gets a bigger slice of the pie. That's obviously part that we want to really emphasize, because that's the bit that we control completely ourselves. As we're talking to a business school audience, some of your students, I'm sure, will be thinking, well, hold on, why don't Louis Roederer just sell Cristal directly to clients? Why do they need a platform like Cru, regardless of how great it is? And this is a question we ask ourselves too, it's a business risk. Now, we don't currently regard it as a huge risk, because to put in place those distribution channels, it would be a lot of work. But there are some pretty big companies out there on the producer side, and there are, at the very margin, there are some producers selling directly to clients. It certainly happens in the US. Some of your students may have heard of Screaming Eagle and some of these very sort of high-end Napa Valley wines, and they are actually sold directly to a private client mailing list. So no need for Cru there. That's a potential risk for us. So the secondary market is what we can always sort of control and own, if you like. But no, at the moment, the primary market is still absolutely the driving factor.
You started thinking a little bit about future considerations, and tempted to just give you the last question about that. You know, given what you've learned, your experiences, given where Cru is now, what you've built up, what's next, do you think? Or where do you go?
Well, I probably answered most of it. I mean, the most important thing of all for us is to become, in fine wine, there is no globally dominant platform. There is no Airbnb, there is no Uber, there's not even a Hertz, or there isn't a McDonald's, or nobody has global scale. And so the first challenge for us, I think, is to get up and running in all the major markets and to give a consistently high quality service that people can rely on. So as you know, if you go check into a Sheraton hotel or a Holiday Inn or whatever, you expect a certain sort of unit, or Starbucks, they say, expect a uniformity of service. So that's the first thing we need to achieve. That's a major goal for us. And then I think after that, we do want to focus on product innovation as well. And we do have some ideas about ways that we can maybe use technology even more to make fine wine and spirits even more accessible for people. Because one of the big challenges we have now is it's just so expensive. The top fine wines, as you know, I'm sure, Henrik, you can end up paying $100,000 for a case, very easily. And that's obviously prohibitive for almost everybody. But using technology, using perhaps fractionalization and, trading via tokens and the various other things that we're looking at, we're trying to find some ways that we can, cut the costs very significantly through some kind of fractional ownership, and make all those products available to everybody, because that would be a great thing to do, and it'd be good for the long-term health of the industry.
Fantastic. I think it's time, probably a little overdue for some questions, and we have wonderful questions. I want to start with Luis Barbosa, who asked a question that's almost the same as one of the teaching questions for that case, which is, why stop at wine and spirits? Why not have a broader product range of other things that similar clients will be interested in?
Yes, some kind of luxury Amazon. We think about it all the time. I mean, honestly, we've never done it. We've never even really considered it, even to the sort of planning stage. And I think the reason for that is, I think there's two reasons. The first one is there's still so much we can do in wine and spirits. And I think what I've learned in my career in business is it's pretty hard to be good at anything. It really is. And to be good at lots of things is much harder. So I think there's enough room for us to grow within just wine and spirits to keep us busy, certainly for a while. But also, every market is different. I mean, I have looked at other luxury markets, I'm sort of reasonably familiar with how the watch market works, and we are somewhat familiar with how the art market works, but they just seem so different. The supply routes are different. There's actually a bit less in some ways of a secondary market trading culture in some of them. Art obviously is quite difficult because it's one-off pieces. And then in other markets, the producers are much more, have a much bigger stranglehold over the secondary market. That would be the case in watches. Things like luxury handbags, fantastic, great area, very interesting, but quite difficult to trade actually, because, the LVMH and Kering and these guys don't take kindly to it. They, whereas in wine, it's quite tolerated and perhaps even celebrated by the producers, certainly tolerated. So yeah, when we've looked into the potential niches that we could expand into, there always seems to be reasons why it would be tricky. So, but look, I've said at the beginning, always keep an open mind. Never think you know everything. So we keep an open mind, but at the moment, I would say it's not on the horizon.
Okay, so we have some questions about competitors also, and they would name competitors. So I'm curious about who you regard as the main competitor, and then maybe after hearing your answer, I'll mention some of the ones that have been asked.
Well, I don't. Yes. Well, I'm not sure I want to give airtime to. Well, the thing about Cru is we're a full service model. So we appeal to people who want to do a whole range of different things. So we appeal to people who just want to buy a case of wine, have it delivered, have some friends over and enjoy a glass of wine, all the way through to people who've got, you know, $500,000 to invest. They see wine as an alternative asset class, and they want a platform that they can manage their investment on and you know, do everything they need to do. And that's, you know, it's a big ask. So I think we are one of the very few companies that really offers all of that. And so I don't think we have any direct competitor at on the full service spectrum. However, there are bigger companies than us, certainly on the retail side, if you like. There are companies like Berry Brothers in the UK who are the biggest in terms of transaction volume, let's say sales, and, you know, established in 1698, I believe. You know, great reputation, very reputable company. There are some other trading companies based in the UK who are quite active. And then on the investment side, you've got companies like Cult Wines who are very focused on, well, they're only focused on pure investment. And they've you know, they've done a good job at articulating that, and they have gathered you know, some quite significant assets. I have some question marks about their access to liquidity and how they're actually going to generate the returns, but you know, this isn't the forum to explore those, I don't think. Yes, no, look, we've got lots of individual competitors. There are lots of people who are good in one particular market, but you know, we're trying to do full service in the whole world, and if we are able to achieve that, we will be, I think, unique.
So this links right into another question that I have. This is from Eric Wimpen. I'll rephrase it a little bit. No, you're going into markets, geographical expansion one by one now, but do you have a stopping rule? Something like, this is the type of market that we would want to go into, and this is maybe not. I mean, in the US, you've gone into, you know, California, which is a country-sized market, but then you have Rhode Island, right?
Yes. That's a good question. Yes, that is a very good question. It's quite hard actually to know in advance, because market research is quite thin on the ground, because there's quite a bit of market research about wine overall, but we are operating in a very small subsection of the fine wine markets. It's actually quite difficult to isolate data on how much each market is worth. So we do have to go a bit by sort of gut instinct. But what we've learned is where there are high concentrations of net worth, there's almost always interest in fine wine. I'd say there is always interest in fine wine, actually. So it's not hard to look at a map and figure out where the best markets might be. But then you have to layer in all kinds of other things around competitiveness, you know, ease of entry. You know, we haven't gone into Japan yet. Japan is actually a fantastic market. Very surprising, actually, how big a market is Japan for certain product categories, particularly champagne. South Korea comes up again and again as a wonderful market, particularly at the moment. We also like markets where we can buy and sell. So part of the reason for being attracted to California is we obviously buy a lot of wine in California too. So for that reason, Australia is always on our radar screen, and we do have live conversations with some people in Australia to look at that market. But no, I mean, there's not much you can do really. And again, I'm a great believer in, you know, small scale experiments. You know, don't bet the farm. You know, try to get somebody who knows what they're doing, put them in there, plug them into our network, our platform, and, you know, see how they get on. So we tried it in China, we couldn't make it work, but, you know, we tried it in Singapore and it was fantastically successful. You know, so it's not completely knowable in advance, but those are roughly the rules that we would apply.
So there's a very simple question also, but I think as one that comes from people being potential customers, because there's a question, isn't it challenging to guarantee the authenticity of the bottles, especially when they come from Livex? What do you do?
No, not at all. No, so we offer condition reporting as one of our standard services. No, absolutely not. No, so we have guaranteed status, which is where we have absolutely authenticated the provenance, and we for many of our larger value, higher value purchases, we supply photos, front and back labels, but the wine is guaranteed to be, in perfect condition, so levels in the neck and labels undamaged, original wood casing, etc. And if it isn't, we'll replace it. So no, I think that's that maybe is just a bit based on a bit of maybe misinformation.
Okay, so I think we're getting close to the final question, and let me. Roberto has asked one that I find interesting. So, given the history and everything that happened, if you had to do one thing differently, what would that be?
Oh God, I should always anticipate this question. Well, I suppose personally, I wish I'd started sooner. I, spent 10 years working in investment banks, and whilst it was financially lucrative, I didn't, really enjoy it very much. And I felt at the time that I sort of needed to do that, and I didn't really know what the alternatives were. But I think if I had started this company, even 5 years earlier, because you get that sort of compounding of growth, I think we might well be already in a position of being, globally very well established, let's say, and maybe we would be able to say that we were the dominant fine wine and spirits platform in the world. I still think we'll get there, but I mean, I hope it's not a cop-out answer, but I think probably, honestly, that is the most. That's probably the thing at the top of my mind, is that maybe it's a message for for the budding entrepreneurs watching the broadcast here, is that give it a go. Try to employ these lessons, keep flexible, keep experimenting, keep letting the data lead you, and try to free your mind from too many preconceptions and let the market tell you what to do. Start as soon as you can.
Wow, I mean, I'm so happy I asked that question last, because this is, well, it's what we teach, only better. There are lots of business ideas among people who are in our programs, and some of them can be launched right away and they're done. The majority, people have to wait. And then the question is, how long do you wait? When are you financially secure enough to get started? And I mean, your answer is clear, right? You start sooner and then you'll get there, right?
Well, I mean, I would. I think, I mean, everybody's life is different, and people can be entrepreneurs at any age, and I'm living proof of that. But yeah, I mean, I think the rewards are very back end loaded. You struggle for the first few years, but if you just keep that discipline about cutting things that don't work, investing in things that do, and stay nimble, and don't be too proud to pivot. Maybe that should have been the title of our presentation. Don't be too proud to pivot, because I think sometimes people they're reluctant to do it. Then suddenly those later years you get this big compounding. Suddenly 25% growth is tens of millions of dollars, and then it's hundreds of millions of dollars, and but it's still only 25% growth. Whereas at the beginning, 25% growth was barely paying your rent in your apartment. So look, these are all decisions everybody has to make for themselves, but yeah, I would say sooner rather than later.
Fantastic. Thank you so much. And thank you to all the attendees. Wonderful hearing about this. Hope you'll be with us for the next session of the case talks. Jeremy, wonderful hearing from you. Take care.
Thank you so much, Henrich. I enjoyed it.